Welcome to Tax Smarts Unlocked, the podcast for individuals and small business owners looking to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services, each episode is packed with insightful advice on proactive tax planning to help you navigate the complexities of tax laws. Here's your host, David Robson.
Welcome to Tax Smarts Unlocked, where we turn tax panic into practical moves. I'm David Robson, your guide for today's solo episode, and we're talking about one of my favorite power windows in planning, the middle of the year. If April is about filing history and December is about last-minute heroics, June and July are about control. You've got 6 months of real data, 6 months left to steer, and plenty of room to avoid paying more than necessary. Today's episode is called Tax Smarts, at the midpoint, catching problems before they cost you. I'll walk you through a clean, repeatable mid-year checkup you can do whether you're a W-2 earner, a side hustler, or running a small business. We'll cover when you know you need one, what to review, the mistakes it exposes early, and the moves that actually lower taxes, not theory, but steps you can take this week. Think of this as a diagnostic visit for your financial engine. No scare tactics, no jargon for the sake of it. Just a professional framework with a hint of humor, because if we can't smile while saving money, what are we even doing? Grab your latest pay stub, your year-to-date numbers, maybe last year's return, and let's turn the midpoint into your competitive advantage. By the end, you'll have a plan and fewer surprises this year. Let's start with why mid-year is such an underused planning window. Most people think taxes are a once-a-year event. File in April, breathe a sigh of relief, then repeat. Some folks wake up again around December and try to sprint through charitable donations and last-minute contributions. But the midpoint is where the math actually works in your favor. By now you have roughly 6 months of income and expense data. That is enough to build a reliable projection without guessing, and there is still enough runway to change course. If your withholding is light, you can fix it with minimal pain. If your business is trending higher or lower than expected, you can correct estimated payments, adjust spending, or accelerate or defer key decisions with purpose. Mid-year also improves accuracy. Early in the year, your numbers are too noisy. Late in the year, your options are limited. Right now, you can compare year-to-date reality against last year's outcome and see the story developing. You can dial in retirement contributions, time equipment purchases, or adjust health savings activity while you still control the timing. And here's the kicker. Mid-year planning reduces stress. It turns December from a panicked rush into a measured finish. Less adrenaline, more intention, better results. That's why professionals love June and July. It's quiet, factual, and surprisingly profitable for attentive taxpayers everywhere. How do you know you need a mid-year checkup? Start with change. If your income shifted, maybe a raise, a new job, commission spikes, or a side gig that finally clicked, you need a new withholding or estimated payment plan. The IRS safe harbors protect many people, but they don't erase underpayment penalties when cash flow patterns change. Life events are another trigger. Marriage, divorce, welcoming a child, sending one to college, buying a home, or retiring can all redirect credits, deductions, and filing status. If any of those happened or are on the horizon, mid-year is the time to model options. Business changes matter too. If you started a business, changed from sole proprietor to LLC or S corporation, added contractors, or shifted your product mix, your tax posture shifted with it. The middle of the year lets you verify quarterly payments, payroll filings, and owner compensation methods before mistakes harden. 2 more flags. You received a refund far larger than expected last year, or you owed a balance you didn't like. Either outcome suggests withholding and estimates were misaligned. Finally, if you haven't looked at your numbers since April, that's a sign in itself. Data gets stale fast. A quick checkup brings your plan back to reality and keeps surprises from sneaking up when the holidays arrive. Be proactive now, not reactive later, and breathe. Let's talk about what the checkup actually involves for individuals. Step 1, review withholding. Grab your most recent pay stub and look for year-to-date federal withholding. Divide by your gross year-to-date wages to see your current effective withholding rate. Then compare that to your projected tax rate based on last year's return and any changes this year. If those numbers are far apart, adjust your W-4 now rather than in November. Step 2, revisit retirement contributions. Are you on pace to max or hit your desired target in your 401k or 403b? If a raise happened, your contribution percentage may no longer meet your goal. Mid-year is perfect for nudging it upward without cramping cash flow. Consider whether a traditional or Roth election better fits your bracket and future expectations. Step 3. Health accounts. If you have an HSA, check contributions. If you have an FSA, confirm utilization so you don't leave money behind. Step 4. Deductions and credits. Are charitable gifts, education costs, and expenses documented? Are you tracking state tax payments to manage the SALT cap? If you're eligible for energy credits, plan the timing of improvements now. Finally, evaluate investment moves. Review capital gains realized so far, harvest losses where appropriate, and make sure dividend income aligns with your estimates. None of this is scary. It's a tune-up that prevents bigger repairs. For business owners, the mid-year checkup adds a few specialized pieces. Start with your year-to-date profit and loss. Compare revenue and gross margin to your expectations and to last year. If profits are up, great. Now adjust estimated taxes and consider accelerating retirement plan contributions like a SEP or solo 401k. If profits are down, don't overpay estimates. Conserve cash and revisit forecasts. Next, verify that expenses are being captured and categorized correctly. Mileage logs should be current. Home office should be measured and documented. Subscriptions, software, equipment, and supplies need consistent treatment. If you've purchased or plan to purchase equipment, review Section 179 and bonus depreciation options alongside your profit projection so you don't overshoot or undershoot deductions. Payroll matters too. If you're an S corporation owner-employee, reassess reasonable compensation. Mid-year is the right time to adjust salary versus distributions so it tracks business performance and compliance standards. Review payroll tax filings and state registrations to ensure nothing is missing. Don't forget sales tax and contractor compliance. Are you collecting in the right states? Have you issued W-9 requests to new vendors? For contractors paid via platforms, confirm 1099-K exposure and record keeping. Finally, calendar your deadlines. Remaining quarterly estimates, payroll deposits, sales tax returns, and any licensing renewals. The mid-year review is your chance to tighten the system before volume spikes in the fall season. When we run mid-year reviews, we catch the same avoidable problems again and again. The first is outdated withholding. People change jobs, get raises, or add side income, but their W-4 never moves. That gap builds underpayment penalties and shock. A 5-minute adjustment in July can erase both early. Second, missed deductions that require action before year-end. Think retirement plan funding, HSA eligibility, accountable plans for reimbursing owner expenses, timing of equipment purchases, or substantiation like mileage logs and receipts. If you wait until tax prep, it's too late to create records or change timing. Third, filing status or dependent changes that ripple through credits. A new child, a dependent aging out, a divorce decree that allocates credits, or a parent you're supporting. These impact child tax credits, education benefits, and head of household status. Mid-year gives time to align documentation and withholdings accordingly. Fourth, business owners misclassifying expenses, like putting owner draws as wages or mixing personal and business spending. That leads to books, missed deductions, and scrutiny. We catch missing quarterly deadlines, sales tax, payroll deposits, and estimated payments. Those trigger penalties that add zero value. Finally, we spot strategic opportunities. Roth conversions in lower income years, gain harvesting if you're in the 0% bracket, or timing charitable gifts with donor-advised funds. Catching these in July, not January, is the difference between designed results and accidental outcomes. Let's map a practical, do-it-this-week workflow. First, gather documents, your latest pay stubs, year-to-date payroll summaries if available, your business profit and loss and balance sheet, and last year's filed return. Add brokerage statements for realized gains and dividends, plus HSA and retirement contribution records. If you track books and software, print year-to-date reports. Second, estimate your full year income. For wages, annualize your current pay rate and typical bonus if known. For business income, take year-to-date net profit, adjust for seasonality, and project a conservative, most likely, and optimistic scenario. Third, run a rough tax projection. Compare this year's projected income, filing status, and deductions to last year. Then calculate expected federal and state liability ranges. Fourth, line up cash paid in. Add federal and state withholding to your estimated payments already made. Does that cover 100% of last year's tax or 90% of this year? If not, adjust your W-4 or the next estimate. Fifth, choose actions, increase or decrease withholding, change quarterly estimates, tweak retirement contributions, schedule equipment purchases, or set up an accountable plan. Sixth, Build a tracking checklist for the rest of the year. Include due dates for Form 941, sales tax, estimates, and retirement deadlines. 7th, calendar a quick month-end review. If this sounds like a lot, remember, it's easier than surprise penalties and cheaper than scrambling later anyway. A few quick case studies show the payoff. Case 1. Jenna, a salaried professional, received a mid-year promotion with a sizable bonus potential. Her withholding didn't change, and her April refund the prior year made her feel safe. Our checkup showed she was tracking toward a balanced due plus penalties. We increased her W-4 withholding, nudged her 401k rate upward, and directed a portion of bonus to pre-tax. Result, no penalty, higher retirement savings, and a manageable year-end. Case 2. Martin and Luis, new parents who bought a home. They assumed itemizing would beat the standard deduction and had not updated daycare documentation. We ran projections showing the standard deduction plus child tax credit provided a better outcome, and we set up dependent care FSA contributions for the second half of the year. They also timed minor energy improvements to capture credits without overspending. Case 3. Tasha runs an online shop that took off. Her books mixed personal and business expenses, and estimates were based on last year's modest profit. At mid-year, we cleaned categories, set an accountable plan, and adopted a solo 401k, with contributions scheduled alongside cash inflows. We also resourced inventory timing to manage margins. Outcome, clean books, aligned cash, and thousands saved in tax and penalties. Bonus case, a retiree converted Roth in a low bracket safely. Mid-year made it clear. If you like checklists, here's a compact action plan you can run after this episode. Individuals, check withholding, retirement rate, HSA or FSA funding, and current year itemizing versus standard deduction. Review realized gains and harvest losses if helpful. If your employer offers after-tax 401k contributions or mega backdoor Roth, confirm eligibility and logistics. Self-employed, reconcile books, refresh projections, reevaluate quarterly estimates, document mileage and home office, and schedule equipment decisions. Confirm state registrations, sales tax, and contractor W-9 collection. Everyone, set a 30-minute calendar appointment for a month from now to recheck. Small adjustments beat grand gestures made too late. Now, when should you bring in a professional? Consider it when your situation changed, you're juggling multi-state issues, equity compensation, rental properties, or a growing business. A good preparer or planner isn't just a form filler. We translate your goals into tax-efficient actions, help you prioritize, and keep the workflow moving. Most importantly, we spot trade-offs and timing windows you might miss while working a full-time job. If you're interviewing pros, ask about planning cadence, pricing transparency, communication, and how they document advice. You deserve proactive guidance, not a retroactive report card. And yes, you should expect some humor, because smart planning should feel empowering, not intimidating. Mid-year is your chance to shift from reaction to design. Start small, start now, and iterate. That's our mid-year game plan. We covered why June and July are planning months, the signals that say you need a checkup, and the reviews to run whether you're an employee, self-employed, or managing a growing business. We looked at common problems mid-year catches, from outdated withholding and missed deductions to filing status shifts and messy books, and we turned those into clear actions. Adjust W-4s, refine estimates, document deductions, and align retirement contributions with your goals. Remember, a mid-year checkup isn't about finding bad news. It's about having options while you still have time to use them. Small moves now can neutralize penalties, free up cash flow, and compound your long-term savings. And if your situation is complex or changing quickly, this is the perfect moment to bring in a professional who can turn your numbers into strategy and momentum. If today's episode sparked questions, set a quick appointment with your preparer or planner, or block 30 minutes to run the checklist yourself. Then calendar a follow-up next month. Keep the engine tuned, and December becomes a smooth landing rather than an emergency stop. Thanks for listening to Tax Smarts Unlocked. I'm David Robson. If you enjoyed this show, share it with a friend who's dreading their tax bill, and subscribe so you don't miss the next session. Until then, plan and keep your money working.
Thank you for joining us on Tax Smarts Unlocked, the ultimate podcast for individuals and small business owners ready to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services. Each episode has been carefully crafted to provide you with insightful advice on proactive tax planning. By adopting a smarter tax approach, you can focus on what you do best, growing your wealth and your business. We're here to guide you every step of the way. Don't miss an episode. Subscribe to Tax Smarts Unlocked on your favorite podcast platform and unlock the secrets to confident tax planning. Remember, it's time to take control of your taxes and unleash your full financial potential.